And all about stocks this week, it's been a good run for Dalal Street. Both the Sensex and the Nifty up 1.5%. RIL is the stock in focus as it announces better than expected results. We'll tell you what your strategy should be. And Prakash Diwan tells you why you should invest in Hinduja Global Solutions and Cox & Kings at the current levels. Welcome to All About Stocks, the show specifically meant for long-term retail investors. Now, the markets have had a fairly good week. We've heard some very impressive numbers come out from corporates. And we saw really our first weekly gain in this new year. Friday saw the markets consolidate a little bit. Over the next half hour, we'll tell you what your strategy should be over the coming week. And we'll also take a special look at RIL after those numbers. We'll focus on the telecom sector and find out what's going on in that sector as well. If you have any questions about your stocks, you can send it to us. Email ID is at the bottom of your screen. Before we go any further, let me bring in Ajay, who's going to give us a close look at the numbers we saw come out from RIL on Friday. Remember, they came out post-market hours, so the stock has not reacted yet. That you can expect on Monday morning. Ajay, take us through the numbers.
Well, Faye, Reliance has managed to do it again for the third quarter this year. We are looking at outperformance coming in as far as profitability is concerned, marginally higher than what the Echinor poll was indicating. Two kickers of growth. Of course, the other income component also has played a very important part, not only this quarter but past couple of quarters. But the interesting part is the surprise which came in this quarter was from the gas side of the business. That has started to turn around, and that's why the EBIT margins of gas business have grown much higher than what the street was estimating, or even compared to the second quarter, which analysts are reading as some kind of early green shoots, which was earlier seen as a very ailing side of the business, which is gas business, seem to be turning around. Petchem and refining side of the business were slightly under pressure, which is seen as a one-off by most on the street. But most are quite surprised that the gas side of the business seem to have turned around and only will add on to the strength in coming quarters. Shale as well as retail contribution is also gradually going higher. But it still remains very little combined if you look at or compare it with the overall size of the Reliance Industries business. So this time around they managed to do it. Interesting was that a lot of Reliance analysts have already upgraded the earnings estimate for the company 15 to 20 days ahead of the earnings. So really have to see what scope is there as far as earning estimate upgradation is concerned. But most on the street are now getting constructive on Reliance for the next 1 to 2 year kind of investment horizon.
All right, Ajay, thank you so much for that update. Joining us this week on All About Stocks is Prakash Diwan, Director at Altamount Capital Management. Prakash, thank you so much for coming in. Now, really interesting results from RIL. And you obviously expect some really positive reaction on Monday morning. But tell us what the long-term reaction is going to be to this stock. We've seen so much movement. It's been in the news because of the announcements they made about their telecom business. The retail business is looking really good. Where do you see this stock go over the next 1 year?
Actually, it's a sense of deja vu that you get, because even last year we were talking about the same kind of expectations. And if you see the Friday numbers that came on Friday evening, I don't think that's going to set the stock on fire immediately. But there are a lot of key changes that very clearly the stock is shaping up into. The contours of its business, the company's business, are changing positively. And to begin with, you look at the E&P business, which is, whatever the reason, maybe they've turned profitable there. There's been a contribution which is significantly higher. The petchem business has suffered, but that's more because they're kind of adding capacity. So till they reach optimal utilization levels, that could continue for a while. But as you said, it's the retail and the telecom business which are the jokers in the pack. And just a small announcement that they might get into the 2G area, and that's the cat amongst the pigeons for the rest of the companies. But the 4G is going to be a game changer, and I think that could happen probably in the next 90 days for this company. And if that were to happen, first quarter of FY15, gas price hike, telecom launch, the stock could get rated completely differently.
So, from where we are today, what are you telling your clients right now? Should we be picking up RIL at these levels, not waiting for a correction anymore?
No, if you get a correction, buy more. But I doubt if Reliance is going to participate in any sort of, any downside from the market completely at this level, because it's very healthily consolidated into this zone, and if it breaks out in a very significant way. So you could see it move to that 1100 kind of a level in the next 6 months very easily, which is at least a 20% upside.
So if we do see RIL hit the 1100 levels at any point over the next 6 months to a year, would you expect it to go even further from there from a longer term point of view? Take a 3-4 year view on it.
Absolutely, because this is going to be the first beginning of a strong bull run of sorts, and it could go all the way organically if the company manages to grow at, let's say, about a 22-25% kind of a band CAGR. The stock would do slightly better than that, which means that 1100 you could probably start looking at targets about 1400, 1750. So for the long term investor, it's the best time to buy into a Reliance at this point. There's very little downside risk. Huge cash rich company, can weather the storm, has everything going for itself.
All right, everything going for itself. In fact, we have a question from Sujit Bose, who's written in saying he has 290 shares of RIL, which he bought at 1118. He wants to know if he should hold on to that stock. RIL, as you know, on your screen, ended the week at 884. Should he turn 290 into 300 shares of RIL? Add some more, perhaps?
He could. I mean, these are great levels, as I said, and there's no need to panic and sell out at any point. But if he has the money, if he wants to average out, this is probably the most ideal time. His cost could come down dramatically. And now the wait period is going to be much lesser than what people have waited. People have waited for about 2 years. Nothing much seems to have happened. But I think, it's as they say, we are closer, to the end than ever before. And that could do things very differently for the stock.
All right, so it's a good time right now to be adding more RIL to your portfolio. But like Prakash mentioned a little while ago, we saw an interesting movement in the telecom sector this week. RIL announced its plans that it might take part in the auction for spectrum, and we saw telecom stocks react quite sharply. Ajay, in fact, is going to take us through what happened with the sector this week. Ajay.
Well, Faith, telecom sector was in focus this week. Interestingly, if you look at Bharti, Idea, some of the large caps or incumbents in the sector, all of them have lost around 6 to 7% in market cap this week on one particular announcement that Reliance Jio, which is the subsidiary of Reliance Industries, is keen on entering the voice side of the business. We've seen Goldman Sachs, Credit Suisse, all of them turned a cautionary note and have also downgraded Bharti and Idea and have cut the earnings estimate of the incumbents, saying that Reliance Jio's entry into this particular sector would make it extremely competitive, not only while bidding for spectrum when it happens later this particular month, but also because the new offerings on the 4G platform will be very price competitive and is likely to have a massive impact or dent as far as business models of incumbents are concerned. We saw these concerns taking center stage this particular week, and we saw massive price erosion from the stocks of Bharti, Idea. Most on the street believe that ambitious rollout plans and a very aggressive pricing strategy will be the key when Reliance Jio actually inaugurates their telecom business or launches their telecom business officially later this year.
All right, Ajay, thank you for that update. Now, given what we've heard about the telecom sector, is obviously a knee-jerk reaction in the market. But tell us what the prospects are for these companies, for Bharti Airtel, for Idea Cellular, after Reliance's announcement.
Actually, the announcement is probably has scared people more than the real thing. Because you really don't know whether Reliance is going to have a predatory pricing entry into the space, whether there is going to be a significant entry or whether it's more of an incremental presence along with 4G.
That's the nature of the company. They work on volumes, they work on bringing down prices.
It may not make sense for them to kind of compete with some of the very well-entrenched market leaders.
Okay.
But what it does in any case, whichever strategy they adopt, and the approach that they take, it's going to reduce pricing power for the Ideas and the Airtels of the world. And Arcom is not a stock that I would really want to dwell much on because they really don't have that kind of pricing power. But for Idea and Airtel, that's just started getting into that pricing power for the last 2 quarters. We saw numbers surprise people well, and that could kind of change. And there could be a lot of stay away kind of a stance that people would take from these stocks. And which means you could see sell-offs which had just started kind of improving from the institutional side. Already Friday we saw some, Thursday and Friday both, I mean, there were days when telecom took the brunt, and I think that still kind of got a downside of about 15-20%.
So what should I do if I'm holding either one of those stocks, if I'm holding Airtel or Idea Cellular?
You could definitely, it's like, the company that you own is getting into a space which is going to get suddenly very competitive. So either you should move out of the sector, wait for it to stabilize, or probably buy a better player within the same sector.
So who's a better player?
And it could be Reliance once they announce their plans. So you'll have to wait for Reliance to announce and realize in terms of how much contribution does telecom have in this entire game of things.
I know you said you didn't want to talk about it, but Arcom stock moved slightly inversely to the rest of them. It went up a little bit when the rest were going down. For someone who's holding Arcom, just give them some quick advice on what they should be doing right now.
No, anytime they get this kind of a spurt, start booking profits or exiting. Don't exit on day one or on a single day of sorts, because Arcom could be a beneficiary of the Reliance Jio presence in some or the other way. And we really don't know again what kind of contours of benefits that could accrue. But if as
is
when
that
Arcom
a risk
moves
worth
out,
taking, or does it just make sense to exit at this point?
no, I think Arcom would benefit significantly from where it is. So, I mean, if you're talking about at least a 25% upside, it's decent enough.
Welcome back. You're watching All About Stocks in ET now. Thank you so much for staying with us. Prakash Diwan is still with us in the studio, helping us figure out our long-term investment strategy when it comes to stocks. In fact, Prakash has been kind enough to pick out two stocks that he believes make sense right now for you and me. The first of those two stocks is Hinduja Global Solutions. It ended the week at 572, fairly close to a 52-week high. Prakash, is it?
Oh, yes.
How much more do you expect it to run up?
No, I think the run-up has started recently because it's a little bit of an illiquid stock. It tends to kind of move in spurts. So I think it's very clearly seeing a lot of change in hands, and the kind of numbers that it could clock going forward could surprise the market, because they're going to be non-linear growth very clearly from most of the inorganic acquisitions they've spent their resources on in the last 18 months. If you see, they've acquired small and big units from across verticals. And certainly there's this whole comeback of sorts that BPOs are making. Very clearly, it's a reminder of the fact that if the US does well, it needs to outsource all of its work to people who can do it in a cost-effective way. So you look at the likes of a First Source, you look at the other players which had BPO units, all of them have reported very good traction. So Hinduja Global has been kind of off the radar. But I think for retail investors, I don't think it's an institutional pick as yet because of the liquidity. But for retail investors, you could get a very decent upside.
When you say a very decent upside, try and quantify that for us. Give us a target.
I mean, I think about a 45% upside from here on. 735, 740 is easily.
In how
achievable.
long?
Oh, 12 months, less than that.
So. All right, so that's an optimistic call. And remember, on this show, we always keep a track of those calls, and every time Prakash is back in the studio, we'll ask him about it. The second recommendation Prakash has brought us this week is Cox & Kings. Now, Cox & Kings ended the week at 134. In all fairness, Prakash, 2013 was a really tough year for anyone in the discretionary spending industry. Cox & Kings is one of those stocks. What do you think has changed this year?
Yeah, but it's still done very well. You're right. I mean, so what's happened is the differential between the leaders and the also-rans has kind of widened. A lot of shops have closed. The digital platforms for some of them, kind of couldn't deliver what they were expected to and what they promised. But Cox & Kings is actually, in fact, it's moved from, those 95 levels to about 135, 140 very quickly. And the reason that's happened is because 2 years back, within about the last 2 years, they'd done an acquisition in the UK.
Right.
A company which was focused on to servicing the student population. And UK now attracts one of the largest concentration of globally of foreign students come not just from Asia, but it's Africa, it's other parts of Europe, and that kind of gives them a captive market which is very defensive in nature. It's got nothing to do with the business slowdown and stuff. And this company, along with Cox & Kings in the new amalgamated version, could kind of get listed at very attractive levels. In the UK. So, as and when that happens, you'll probably see a value unlocking kind of a thing. I think 200 is ideally a mark that it could attain very easily within this year also. So, 2014 is likely to be much better for them.
All right, we have time to take one more portfolio on this segment. Karthik Mahadevan has written in, and this portfolio is really impressive, given that he's managed to pick up these stocks at such wonderful levels. Let's go over the stocks he has. And the first three on his list are all pharma stocks. He has Lupin, bought at 430 rupees. He bought Ipca Labs at 343 and Kanhaiya Healthcare at 650. And all of those stocks have given him handsome returns. But tell us something, Prakash, at what point should an investor, like Karthik, for example, decide it's time to take some money off the table?
You know, it's very clearly linked to the company you're invested into. If you suddenly feel that the company is not likely to grow beyond the current levels at the same growth rate, there are very clear headwinds that you can see. You know, you can start seeing that in con calls, in the management commentary, climatic changes that happen in the business environment. So that's the time you need to book profits. As a businessman, you have the choice to get out of that business and look for some other better business. But if things continue looking well, let's say TCS at 1200, it confounded people. It was a level that people were scared of, and all-time highs and lifetime highs. At 23, it still kind of promises to grow. So unless something goes wrong with IT and with TCS, why do you need to get out? You don't. So this is exactly what you need to do with the Lupin, with the Kanhaiya, with the Ipca. They're doing well. They continue to ride the curve. But he needs to book profits more out of a prudence investment portfolio strategy. It's not got anything to do with the stock, but any stock that you have and you're making 100% plus, you need to at least take something off.
Take something off, so 50%?
50% is a significant cut from your quantity that you own. But the profits here are, so it's more in value terms. You started off with 1 lakh, it becomes 2 lakhs. Take at least, lakh or less than that and reinvest it into some other asset class.
All right, there are other stocks on his portfolio. Here's 2 more. Here's 1,000 shares of eClearX, which he bought at 106 rupees. He's been holding this stock since 2009. That stock is currently at 1,095. Is this another example of time to take some money off the table as well?
I mean, I'm glad he's waited this long, but of course the stock has also run up from 650 to 1,000 very quickly. So probably, he's been seeing it every day, deciding to move out, and it moves up, and you keep on deferring your position. But yes, the company itself is in a growth trajectory like never before. So here I would not recommend he takes away half of his quantity, but probably at least about 250 out of 1,000 shares.
All right, and finally he's got Yes Bank at 320 rupees. That stock is currently at 351. Of all of the bank stocks, Yes Bank, hold on to that one. Those numbers were impressive.
Impressive, but the smaller private sector banks will start struggling a bit, and then it pays off to be in an ICICI or the likes of that. So I would switch into ICICI with this 31 rupees profit.
Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. Prakash Diwan is still with us in the studio, and it's time for us to look at Prakash's portfolio. Now, the portfolio is currently down about 1%. The Nifty at the same time is up about 6.5%. I'm going to take you through the stocks that Prakash has in his portfolio. It's Oriental Bank of Commerce, Tech Mahindra, Kane, Cipla, Coal India, ITC, M&M, Tata Steel. Now, this portfolio is completed about a year right now. Prakash, I want to ask you, like I always do, about Oriental Bank of Commerce, because in this show, from the beginning to the end, you kept talking about how it makes sense to be in ICICI banks and the likes of which. So, does it not then also make sense for you to switch out at this point?
Yeah, but ICICI at 1,000 plus may not be able to give us that 40%, which we need to recover at least, from a par value, which OBC has brought us down to. And I think OBC has brought us down because the acquisition price has been fairly steep. But if you see in the recent past, it's come back also very well. I mean, I remember in about 3 months' time, it added about 100 plus.
Right.
So there's always an impulse of improvement would be disproportionately favorable. But we're not yet seeing that uptick in the banking segment as a whole. I mean, you really look at banks, they're still struggling. Look at Axis, it's still struggling. ICICI also is struggling. So I would believe another couple of quarters, once the interest rates flatten out, that's the time banks would start doing well. And OBC will be probably able to come back rather than an ICICI doing it at that stage.
All right, let's also talk about Coal India. It's down about 25% since we bought it. And I'm sure a lot of viewers right now have Coal India in their portfolio. They're disappointed now for such a long time with this stock. Yeah. You talked about the fact that you expect a recovery, but when?
It's again, it's been kind of plagued with so much of regulatory issues or announcements from the government side. Every time things start looking up, there's some announcement that brings it back. Now it's talking about, the dividend payout, which the government is looking at making. So, it's not using the cash where it should. It's not getting into ramping up production. So as a company, as a business, it's not getting independently managed, which shareholders like us buy into. So there's always been a disappointment more from that angle. The government gave it out to public, but never let it run like a profitable company. So till that changes, I think the wait could probably be longer. But I would believe the recovery is not going to be difficult or impossible. You know, any couple of good moves and Coal India could actually be 50% up from here. The only thing is that whether people are going to believe in it again, I doubt. You know, it's going to take some time.
So then, would you say if as soon as we see some sort of an uptake in Coal India, we should consider moving out of it?
Yes. So no, you would at least be able to make sure that you don't lose or don't bleed on that holding. So it's a wrong call more from what's happened eventually, but not from a selection criteria, I would believe.
I also want to talk to you very quickly about Tech Mahindra, up 32% since we bought it. Now, this has obviously been one of those calls that's worked out in this portfolio. Tell us how far you expect Tech Mahindra to go going further from here.
I think it should continue doing well, at least grow much faster than some of the other larger players. But it's been fleet-footed with the Saptem addition to the entire the portfolio. It's kind of started becoming much more competitive. And one of the reasons why Tech Mahindra, that's the only IT stock we had in this portfolio, and IT is done well. So, you'll always have in a year a couple of sectors dominate.
Right.
It was pharma earlier last year, it's IT now. So, going forward, it could be banking, it could be maybe, something else. But that's the whole idea of a diversified portfolio. And Tech Mahindra, I would continue holding, expected to do well, at least for the next 4 quarters.
All right, so you're not making any changes in this portfolio, right?
Not at this point in time.
All right, so no changes there for Prakash's portfolio. I'm going to give you a recap of the stocks he has. There's Oriental Bank of Commerce, Tata Steel, Tech Mahindra, Kane, Cipla, Coal India, ITC and M&M. That unfortunately brings us to the end of All About Stocks for this week. Keep sending in any questions. If you have questions for Prakash in particular, feel free to write to us and we'll bring him into the studio and ask him your questions for you. Prakash, thank you so much for coming in. It's always such a pleasure to have you in the studio. You'll find a copy of this show on our Facebook page. You can reach me personally on Twitter. Thanks for watching.